A special thank you to each of our subscribers who make this channel possible. Here's today's story. In a surprising turn of events, President Donald Trump has signaled a potential reversal in his aggressive trade stance against China, leading to a significant rally in global stock markets. During a press conference in Washington, Trump announced that he has no intention of firing Jay Powell, the chair of the American Central Bank, and hinted that tariffs imposed on Chinese goods could decrease substantially. This declaration comes amidst a backdrop of ongoing trade negotiations between the two economic powerhouses, which have seen tariffs soar above 145% in recent weeks. The president's remarks were met with enthusiasm from investors, propelling the S&P 500 and Nasdaq to gains of more than 2.5% on Wall Street. The positive sentiment extended to Asian markets, with Japan's Nikkei index rising nearly 2%, Hong Kong's Hang Seng climbing 2.4%, and South Korea's Kospi up by 1.6%. As trading commenced in Europe, the UK's FTSE 100 index surged by 1.6%, while Germany's DAX experienced a notable increase of 2.6%. The renewed confidence among investors can be attributed not only to Trump's comments regarding tariffs but also to his assurance that Powell would retain his position at the Federal Reserve. This statement marks a significant shift from Trump's previous criticisms of Powell, whom he referred to as a major loser for not cutting interest rates. Just last week, Trump suggested that Powell's termination could not come fast enough after the Fed chair raised concerns about the impact of trade tariffs on the American economy. However, the recent assurance from the White House regarding the independence of the Federal Reserve appears to have calmed market fears, contributing to the upward trend in stock prices. Alongside this, the prospect of reduced tariffs on Chinese imports has further fueled optimism in the financial markets. In tandem with the stock market rally, the US dollar rebounded after hitting a three-year low, rising by 0.25% against a basket of major currencies. Oil prices also saw an increase, with Brent crude rising above $68 a barrel, as hopes for lower tariffs alleviated concerns about the global economy. This surge in oil prices was also influenced by new American sanctions targeting Iranian liquefied petroleum gas and the crude oil shipping magnate Syed Asadullah Amamjama. Meanwhile, gold, typically viewed as a safe haven during times of economic uncertainty, retreated from its recent high of $3,500 an ounce, trading around $3,307. President Trump's comments represent a significant rhetorical shift, marking a departure from weeks of tough posturing and retaliatory measures against China. His statement that tariffs would come down substantially suggests a willingness to negotiate and potentially ease tensions between the two nations. Treasury Secretary Scott Bessent's remarks earlier in the day indicated that the high tariff rates have effectively created an embargo on trade between the U.S. and China, further underscoring the need for a resolution. As the global economy grapples with the repercussions of the ongoing trade war, Trump's pivot towards a more conciliatory approach may pave the way for a potential agreement. However, analysts remain cautious, noting that the path to a comprehensive trade deal is fraught with challenges. In conclusion, President Trump's recent comments have not only boosted investor confidence but also sparked a rally in stock markets worldwide. As negotiations with China continue, the implications of these developments could have far-reaching effects on the global economy. Investors and analysts alike will be closely monitoring the situation as it unfolds, with hopes that a resolution can be reached that benefits both nations and stabilizes the markets. That's all for this story. We upload videos every day covering many different subjects, so hit that subscribe button to stay informed. Thanks for watching.